The financial world watched closely on February 3, 2025, as the United States announced new tariffs on imports. The move sent shockwaves through global markets. The tariffs targeted a range of goods from Canada, Mexico, and China. This sparked immediate concern about potential trade wars and economic fallout. The tariffs, set at 25% on Canadian and Mexican goods and 10% on Chinese imports, were set to take effect on February 4, 2025. The White House cited concerns about border security and unfair trade practices. However, many analysts worried about the impact on businesses and consumers. The announcement triggered a wave of uncertainty in the markets. Investors reacted swiftly, selling off stocks and driving down major indices. The Dow Jones Industrial Average, the S&P 500, and the Nasdaq all experienced significant declines. The price of oil, a key indicator of global economic health, also saw a sharp rise. As news of the tariffs spread, Wall Street went into overdrive. Analysts scrambled to assess the potential impact on corporate profits and economic growth. The consensus was clear: these tariffs would have far-reaching consequences. Companies with significant exposure to international trade were particularly vulnerable. Financial institutions like JP Chase, Deutsche Bank, and Goldman Sachs all revised their economic forecasts. They predicted slower growth, increased inflation, and potential recessions in Mexico and Canada. The tariffs also raised concerns about legal challenges. Both Canada and Mexico vowed to fight the tariffs through international trade organizations. The uncertainty extended beyond traditional markets. The cryptocurrency market also felt the heat. Bitcoin, the world's most popular cryptocurrency, tumbled below $95,000. This drop reflected broader investor anxiety about the global economic outlook. The financial tremors from the U.S. tariffs were felt far beyond North America. In Australia, the country's tight labor market presented its own set of challenges. With unemployment hovering around 4%, inflation was becoming a growing concern. This put pressure on the Reserve Bank of Australia to consider raising interest rates. Meanwhile, in the world of sports finance, English Premier League club Everton FC made headlines with its transfer deadline day activities. The club, facing a relegation battle, desperately needed to bolster its squad. Everton secured the signing of promising midfielder Carlos Alcaraz. They also offloaded young talent Stanley Mills to Oxford United. These seemingly disparate events highlighted the interconnected nature of the global economy. From trade tensions to labor market dynamics and even sports finance, events in one part of the world can have ripple effects elsewhere. Amidst the market turmoil, technology manufacturing services provider Fabrinet announced its second quarter financial results for fiscal year 2025. The company, a key player in the optical networking and data center markets, reported strong earnings, surpassing analysts' expectations. Fabrinet's positive results offered a glimmer of hope amidst the broader economic uncertainty. The company's performance underscored the continued growth of the technology sector. This growth is fueled by increasing demand for cloud computing, artificial intelligence, and other data-intensive technologies. As the dust settled on a tumultuous day in the financial world, several key takeaways emerged. First, the U.S. tariffs served as a stark reminder of the fragility of global trade. Second, they highlighted the interconnectedness of global markets. Finally, they underscored the importance of diversification and adaptability in navigating uncertain economic times.